G'day folks, welcome back to Pete's Investing. It's May 3rd, 2024. This is the S&P analysis with the NASDAQ as well as the Japanese Nikkei and the GermanDax as well as a volatility index. Now we're going to be doing a longer term study on the S&P 500 against the divergence and show you what relevance there is to that with the historical performance of the chart. As well, looking at the heat map, you can see there for the markets we're looking at today, they're predominantly long with the exception of the NASDAQ. It's turned neutral on the monthly. On the weekly, they're predominantly short with the exception of the VIX and the DAX. They've turned neutral. And on the daily, they're predominantly short as well with those differences on the US market and the NASDAQ as well. So first looking at the VIX on the weekly chart, you can see here it's turned neutral after being bullish for a number of weeks there. So it's turned that CCI 150, which is our trend indicator, is actually broken into the moving average band. On the daily, you can see that it's been trending in a bearish momentum again with the CCI below its moving averages. It had a bit of a neutral positioning in the last couple of days. It's broken down again into a bearish outlook. And looking at the 1 hour chart, again, it's been bearish for some time. There is no divergence to talk of at the moment. And there was, you can see there was a bullish divergence back here versus lower lows on the price. It eventually bounced to that minor area there, but there again is no divergence at the moment as we speak. So first off, on the S&P 500 on the monthly, you can see there we're still bullish with our CCI above the moving average band. But notice we've got a lower high on the CCI versus higher highs on the price. That's a bearish divergence. And we did have one back here. You can see there in longer term over those years, and the price did fall off, and that drop was indicated by a retrace back in that level there during that bearish period. On the weekly, again, we've got a bearish divergence on the CCI versus higher highs in the price. That's also giving us a bearish outlook. And on the daily, likewise, I'm going back a bit of history here. We've also got a bearish divergence with the CCI still dropping. And you can see there's been a drop already. Now that may have already hit its minimum target, and that target was the 23% between that low and that high in terms of Fibonacci range. If I draw a Fibonacci in that area between that low and that high, you can see there it's between the 23 and the 38% level. Now that may have already hit its target, and now it's starting to retrace back to the upside. So, and you'll notice on a daily at least, it's broken into a neutral positioning. So it may break higher in the coming days above the moving average band of the CCI. Now what I've done as well is, if you zoom right out to history, back to the late 1980s, and this can go back into the 70s actually, but I've just got this period back here. I've highlighted all these recessions, all these drops in the market. What I'm trying to identify here is, has there been any relevance to the divergence? And if I zoom in here, you can see there that drop was indicated by that bearish divergence, and it dropped quite significantly. And then going back to this one, and I haven't marked all of them, but you can see there are a few little smaller ones that have actually worked out as well. There's a bearish divergence there. I haven't marked that one, but there's another very minor bearish divergence there. If I zoom in, you can see the bearish divergence there on the CCI versus higher highs on the price. And that was a pretty significant drop as well. Then ultimately, we had a double bottom on the CCI versus lower lows on the price, and that actually bounced from there. So these can work in both bearish and bullish divergence indications. If I zoom out, if I scroll up to the next level, which I've highlighted, again, another bearish divergence, double top on the price, fell off, high, and then a bullish divergence, lower lows, and it bounced from there. Again, I'm just highlighting the key ones. Obviously, within some of these smaller ranges, you might find some other divergence. There was a bearish divergence here that fell off quite strongly, well below the 100% retrace between that low and that high. Then ultimately, we had another bullish divergence there. And if you bear with me, as we go up to the modern times, small bearish divergence there, it fell off, and then another longer term bullish divergence there, rose, bearish divergence, dropped off. There was no bullish divergence there. And zooming into on this one, we had bearish divergence there, higher highs on the price, fell off quite strongly during COVID until we come to this period back in start of 2022, another bearish divergence, fell off, little bullish divergence, rose, another bullish divergence, that rose from there as well until today. That's where I've marked it. Has this finished its decline? Now this has bounced after hitting that 23%, as I said, and it may have already done its dash and it may be moving now further to the upside. Before getting more confident and bullish, I'd like to see it break above this resistance. And also I'd like to see this CCI ultimately break higher than that period back there. So the CCI needs to rise up above this level around the 200 level to be more bullish, especially. And by then, if it gets to that stage, we'll definitely see a break above this resistance level as well. Now, zooming in on the 1 hour, so I'm spending a lot of time on the S&P, but I just want to really emphasize that history lesson for you. If you zoom into the 1 hour chart more closely, again, you can see since our last update, we had a bearish divergence. The price rose slightly, and then it fell off quite sharply, and it went almost as low as the 100% retrace level. Remember, the 23-38% is the minimum retrace, and 90+% of the time it does hit that 23%, but it can go a lot lower, as I just showed you on the daily chart. And where we are today, the price is moving in line with the CCI, so there's no divergence. Even to this point here, you can see that the CCI is dropping off, and so is the price, so there's no divergence there. Those lows are higher, those lows are higher, so no divergence again on the S&P. So again, I'd like to see the, based on the daily at least, I'd like to see that break higher to break above this resistance, and also the CCI ultimately to break higher than that previous high back there. Next, we'll look at the GermanDax. I won't take as long for this one, but same principles apply if I did a historical review. As you can see here on the monthly, we've still got a bearish divergence on the CCI. That's lower highs versus higher highs in the price. And we've seen a couple of little retraces back here. And again, you can see there were bearish divergences in each of those cases. That was a bullish movement, but you can see there during that period there, it fell off. Again, it did its dash and it rose higher. But still on longer term, we've still got a bearish divergence on the monthly. On the weekly, we had a bearish divergence up to that point. It fell off, hit its target. Now we've got another bearish divergence longer term between those two peaks, and this hasn't dropped off yet, so we may see a bit of a retrace to the downside. If that breaks higher than that entry back there, that invalidates the divergence on that period. On the daily, you can see there bearish divergence on the CCI versus higher highs on the price, dropped, hit its target, but the CCI is still dropping. So it made a bit of a bounce there, but it's still dropping. So until that CCI invalidates itself, then by that stage we'll see also the price break above the resistance to invalidate it. But at the moment, it's still trending on a potential bearish divergence. On the hourly, you can see this since our last update, it's actually dropped off. There was a bullish divergence here. Again, if I drew a period from, let's look at it from, actually it's from that point there. It's a slightly higher low. If I take it up to that point, it's a higher low as well, versus the same period between there and there. That's lower lows versus higher lows. That's a bullish divergence. You can see there it's actually retraced. And if I drew a Fibonacci level, it's actually hit its target, and that would have been from that low to that high. You can see there, that's between a 23% and a 38%. It's hit its target, and it's currently resting around the 38% level. There's no divergence at this point, so it may have already done it. Now, this could still rise higher. There's no way of telling how far it's going to go. This could actually stop and start trending down, or it can actually go much higher than its previous high. So again, just be careful. At least that's why we look at the minimum level of retrace, and 90+% of the time it hits this target level. Next, look at the Japanese Nikkei on the monthly. The CCI is trending in line with the price, so there's no divergence at the moment. There was a bearish divergence back here. You can see lower highs, on the CCI versus higher highs on the price. Actually bounced down, hit our target between a 23 and a 38% between that Fibonacci range. On the weekly, on a longer term, you can see there we've got a lower CCI, lower highs on the CCI versus higher highs on the price, and I've marked the 23-38% retrace level minimum, and hasn't reached it yet. And at the moment, it's still trending down. The CCI is still dropping. No sign yet of a pullback, so just be mindful of that. I wouldn't be going long on the Nikkei. And on the daily, you can see there since that bearish divergence versus that period, it's actually dropped off, hit our 23.38% target. Seems to have bounced, but again, the CCI is still dropping. The price is still dropping actually. So again, I wouldn't be going long. I'm looking at further downside on the Nikkei until we see more predominant move to the upside on both the CCI and the price. And on the hourly, you can see that's trending in line with the price, so no divergence. We did have a bullish divergence back here historically, bounced, hit our target. This one went as high as the 50% at that point, dropped, and then it rose higher again to the 61% and kept falling. So hasn't breached that 61% level of this Fibonacci range. Once it goes much higher than that, we're going to expect it then to reach and beyond the 100% retrace level on the 1 hour chart at least. So again, predominantly short positioning on Nikkei. So on the NASDAQ on the monthly, again, we've just got the start of this potential retrace of the divergence, lower highs on the CCI versus higher highs in the price. I've drawn a target level between the 23 and the 38% level, going back to that low there. Hasn't reached it yet, and it's still trending in that direction with the CCI trending down at the moment. Now we're in a neutral positioning on the monthly, so just be careful about going long. On the weekly, it's in a bearish scenario with the CCI below its moving averages, and again between this Fibonacci range, we've got a longer term. We had a bearish divergence versus this period, and I've drawn a target area there. Hasn't hit it yet. It still looks like it's trending in that direction. If it breaks below this diagonal trend line here, we expect it to hit that 23% level. On the daily, again, between those peaks on the CCI versus those highs on the price, it peaked out up top of this resistance at 18,465, dropped, hit our target level, and actually broke down as far as the 50% level and bounced from there. But notice the CCI is still dropping, even though it's broken above the moving average bands, giving us a little bullish signal. It's still potentially declining, so just be careful about going long on the NASDAQ. And on the hourly, currently no divergence. There is, as I said, there's been a bit of a bounce after this bearish divergence on the CCI back here between those lower highs versus higher highs in the price. And in that little Fibonacci range, it's hit its target at 23.38 and went below the 61%, a bit below it, and it actually almost halfway down to the 100% level, and it's bounced up from there. So it may have already done its dash and now moving to new highs. So again, just careful about going long on the NASDAQ until we see that break on the daily at the very least.
To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.